ExamPrep.School. Alaska Credit Insurance Exam, exam code InsAK-Credit29 or OPCredit29. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Credit insurance. Insurance terms and concepts. Laws, rules, and regulations. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following best describes the fundamental purpose of an insurance contract? A. To transfer the financial consequences of pure risk among a pool of insureds in exchange for payment of premiums. B. To provide policyholders with guaranteed financial benefits in addition to covering potential losses from insured events. C. To transfer speculative risks, including market fluctuations and investment downturns, from insureds to the insurer. D. To prevent any form of economic loss by fully compensating insureds without regard to policy provisions. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer identifies that insurance contracts exist to spread pure risks among participants through premium payments, providing indemnity rather than investment gains or speculative risk transfer. Reason B is not correct. Guaranteeing financial gains beyond loss indemnification is not the primary purpose. Insurance focuses on loss transfer, not profit sharing. Reason C is not correct. Insurance typically covers pure risks rather than speculative risks like market or investment losses. Reason D is not correct. Insurance indemnifies covered losses per policy terms. It does not eliminate all economic loss or bypass contractual conditions. Question 2. A credit insurer forms a certificate covering 1,000 borrowers with varied default histories. Although default rates spiked among a subset, the insurer's premiums for the plan remained nearly unchanged. Which principle of risk pooling most directly accounts for this premium stability? A. Mandating joint and several liability among borrowers enforces shared responsibility and predictable premium calculations. B. Capping claims through a reinsurance facultative treaty limits liability and stabilizes expected costs. C. Separately pricing each debtor's certificate ensures that high-risk exposures are fully funded by individual premiums. D. Spreading the financial impact of multiple defaults across a broad group reduces volatility in overall loss experience. The correct answer is D. The correct answer is based on the fact that risk pooling distributes individual losses across a larger insured population, which smooths variability in loss experience and allows stable premium rates despite individual default fluctuations. Reason A is not correct. Joint liability enforces cost sharing among specific debtors but does not broadly distribute losses across the entire insured group. Reason B is not correct. Reinsurance limits exposure but is a transfer mechanism, not the primary factor that smooths loss variability within the insurer's own portfolio. Reason C is not correct. Individual pricing allocates cost to each certificate, but does not by itself reduce overall premium volatility across the portfolio. Question 3. Which statement best differentiates an actual cash value settlement from a replacement cost settlement under an Alaska credit property insurance certificate? A. Actual cash value settlement includes deduction for depreciation and vests salvage rights with the insurer, while replacement cost settlement covers full rebuilding cost without depreciation or salvage retention. B. Actual cash value settlement disregards depreciation but limits payment to the outstanding indebtedness, whereas replacement cost settlement deducts depreciation annually. C. Actual cash value settlement reimburses replacement cost without depreciation, but factors in market fluctuations, while replacement cost settlement subtracts the loss residual value. D. Actual cash value settlement only applies to the lesser of replacement cost or current market value. whereas replacement cost settlement applies to full cost exclusive of depreciation. The correct answer is A. Actual cash value is determined by reducing replacement cost by depreciation and gives the insurer salvage rights, whereas replacement cost pays the full cost of new materials without depreciation or salvage retention. Reason B is not correct. That description incorrectly attributes a depreciation deduction to replacement cost settlement and ignores salvage rights and actual cash value. Reason C is not correct. Market fluctuations are not factored into actual cash value, and replacement cost does not subtract residual value. Reason D is not correct. Actual cash value is not based on market value, and replacement cost does involve depreciation exclusion, but not a market value comparison. Question 4. Which aspect of the actual cash value settlement method under an Alaska credit property policy primarily prevents the insured from receiving more than the loss sustained? A. Deduction of depreciation and limiting payout to the outstanding indebtedness, whichever is lower. B. Inclusion of the full replacement cost without depreciation to ensure full restoration. C. Application of a market value adjustment that increases claim payments with inflation. D. Payment of salvage proceeds directly to the insured to offset depreciation. The correct answer is A. Actual cash value enforces indemnity by subtracting depreciation from replacement cost and capping payment at the loan balance, ensuring no over-indemnification. Reason B is not correct. Full replacement cost without depreciation would over-indemnify and does not apply under an actual cash value basis. Reason C is not correct. Actual cash value does not include inflationary market adjustments that increase payouts. Reason D is not correct. Salvage proceeds are typically retained by the insurer, not paid to the insured, under an actual cash value method. Question 5. In credit insurance underwriting, a higher loan-to-value LTV ratio is most significant because it indicates A. Lower premium relative to the insured balance. B. Increased insurer exposure requiring higher premiums or stricter underwriting. C. Extended coverage duration beyond the original loan term. D. Reduced need to assess collateral value at policy issuance. The correct answer is B. A higher loan-to-value ratio means the outstanding loan amount is large relative to the collateral value, which increases the insurer's potential exposure and therefore leads to higher premiums or more stringent underwriting requirements to manage that risk. Reason A is not correct. A higher LTV actually increases risk and premiums rather than lowering them. Reason C is not correct. Coverage duration is tied to the loan term, not the LTV ratio. Reason D is not correct. Collateral valuation remains important for all policies to establish the LTV ratio accurately. Question 6. Which of the following best describes the structural feature of decreasing term credit life insurance in consumer lending? A. It provides a constant death benefit equal to the original loan amount while premiums decrease over time. B. It issues a fixed premium that varies with age at each renewal and maintains a level face amount. C. It offers a death benefit that declines in line with the amortizing loan balance while keeping premiums level. D. It pays a death benefit that remains constant, but premiums increase as the outstanding debt decreases. The correct answer is C. The death benefit decreases in line with the amortizing loan balance while premiums remain level, aligning coverage with declining indebtedness. Reason A is not correct. This describes a level death benefit with decreasing premiums, which is not characteristic of decreasing term credit life insurance. Reason B is not correct. This describes a variable premium and level benefit structure, not the level premium funding paired with a decreasing face amount. Reason D is not correct. This describes a constant benefit with rising premiums, which contradicts the level premium decreasing benefit design. Question 7. Under Alaska credit life regulations, which condition accurately reflects eligibility of co-borrowers for inclusion on a joint credit life certificate? A. Only spouses on a consumer loan may be covered jointly under a single credit life certificate, excluding other co-borrowers. B. Joint coverage is restricted to co-borrowers on business loans and is not available for consumer credit life policies. C. Co-borrowers are required to obtain individual credit life certificates, as joint coverage of multiple debtors is prohibited. D. Co-borrowers named on the same loan are eligible to be covered under a single certificate, provided each meets age and insurability requirements. The correct answer is D. Joint credit life coverage may include multiple borrowers on the same certificate, as long as each borrower satisfies age and insurability criteria and holds insurable interest. Reason A is not correct. Coverage is not limited to spouses. Any co-borrowers named on the loan may be jointly covered if they qualify. Reason B is not correct. Joint credit life is available for consumer loans and is not restricted only to business loans. Reason C is not correct. Joint coverage is permitted under Alaska rules, so separate certificates are not always required. Question 8. A borrower took out a $60,000 36-month installment loan on January 1st and purchased a credit life certificate. At the 18-month mark, the outstanding principal is $30,000, and accrued interest is $600 when the borrower dies. Under Alaska credit life rules, what amount will the insurer pay as the death benefit? A. $30,000. B. $29,400. C. $60,000. D. $30,600. The correct answer is D. The benefit equals the net debt at the time of loss, which includes outstanding principal plus accrued interest. Neither original principal nor unearned premium adjustments apply. Reason A is not correct. This ignores accrued interest, but the death benefit includes interest owed at the date of loss. Reason B is not correct. Unearned premium is not deducted from the death benefit calculation. Reason C is not correct. This treats the original loan amount as the benefit rather than the reduced balance. Question 9. A consumer applies for a credit life certificate on a 72-month auto loan but requests an 84-month term. Under Alaska regulation on policy term alignment, what must the insurer do? A. Issue the certificate for 84 months. B. Limit the certificate term to a statutory maximum of 60 months. C. Limit the certificate term to 72 months. D. Deny issuance because the requested term exceeds loan maturity. The correct answer is C. Credit life term cannot exceed the loan maturity. Therefore, the certificate must be issued for no longer than the outstanding loan term. Reason A is not correct. Policy terms are not allowed to exceed the maturity of the underlying debt. Reason B is not correct. There is no separate 60-month statutory cap that overrides the loan's maturity period. Reason D is not correct. Issuance is not denied. The term is simply adjusted to match loan maturity. Question 10. An insured purchases a credit life certificate with a 2-year suicide exclusion. 18 months later, the insured dies by suicide. Under typical credit life suicide provisions, what is the insurer's obligation? A. Deny the death benefit and refund the unearned premium. B. Deny the death benefit and retain the premiums. C. Pay the full outstanding loan balance as the benefit. D. Pay 50% of the outstanding loan balance. The correct answer is A. Suicide within the exclusion period voids the death benefit, but premiums for the remaining coverage period must be returned under Alaska rules. Reason B is not correct. Although the benefit is denied, premiums for the unused term must be refunded. Reason C is not correct. Payment is prohibited during the suicide exclusion period. Reason D is not correct. Partial benefit payments are not permitted under the standard suicide exclusion. Question 11. Under Alaska Credit Disability Insurance, which of the following best defines total disability for benefit eligibility? A. Inability to perform the material and substantial duties of the insured's regular occupation. B. Inability to engage in any occupation for which the insured is reasonably qualified by education, training, or experience. C. Inability to perform the material and substantial duties of any occupation for which the insured is reasonably qualified by education, training, or experience. D. Inability to perform work at least 20 hours per week in any occupation due to illness or injury. The correct answer is B. The correct answer reflects Alaska Credit Disability coverage, which defines total disability as the insured's inability to engage in any occupation for which they are reasonably fitted by education, training, or experience. Reason A is not correct. This option is own occupation based, whereas the policy requires inability to work in any occupation. Reason C is not correct. This option narrows disability to inability to perform duties, but the policy definition does not hinge on material duties. Reason D is not correct. This option sets an arbitrary hours threshold, which is not part of the policy's total disability definition. Question 12. John purchases credit disability coverage on a 5-year closed-end loan in Alaska and opts for an elimination period before benefits begin. Under Alaska credit disability regulations, which of the following elimination periods could he have selected? A. 0 days. B. 15 days. C. 30 days. D. 45 days. The correct answer is C. This option is correct because Alaska credit disability policies typically offer elimination periods of 30 or 60 days, and 30 days is the shortest permissible waiting period under state regulations. Reason A is not correct. A 0-day elimination period is not a permitted option under Alaska credit disability regulations. Reason B is not correct. A 15-day waiting period is not authorized for credit disability insurance in Alaska. Reason D is not correct. A 45-day elimination period is not a standard or permitted choice under Alaska law. Question 13. Maria finances a vehicle with a monthly installment of $650 and carries credit disability insurance in Alaska. If she becomes totally disabled, what is the maximum monthly indemnity she can receive under her policy? A. $600. B. $650. C. $700. D. $800. The correct answer is B. This option is correct because credit disability benefits are capped at the borrower's scheduled monthly payment, so the maximum indemnity equals the $650 installment. Reason A is not correct. A lower amount is not the maximum. Benefits may go up to the full installment amount. Reason C is not correct. Benefits cannot exceed the borrower's scheduled payment, so $700 is too high. Reason D is not correct. A $800 indemnity would exceed the monthly installment and is not allowed under Alaska rules. Question 14. After a disabling injury, David's physician releases him for part-time work at reduced hours. He carries credit disability coverage on his auto loan in Alaska and requests a pro rata benefit based on his reduced earnings. What benefit payment should he expect under his credit disability policy? A. A full monthly benefit. B. No benefit payment. C. A reduced flat amount equal to 50% of the benefit. D. A prorated benefit based on reduced hours. The correct answer is B. This option is correct because credit disability policies typically exclude partial disability and only cover total continuous inability to perform work duties. Reason A is not correct. Credit disability does not pay a full benefit when only partial disability exists. Reason C is not correct. There is no provision for a fixed percentage payment for partial disability in credit disability insurance. Reason D is not correct. Prorated benefits for partial disability are not provided under typical credit disability coverage. Question 15. Under Alaska regulations governing credit unemployment insurance, which of the following is a required eligibility criterion for involuntary unemployment benefits? A. Maintained continuous employment for 12 months before involuntary termination. B. Was involuntarily terminated for reasons other than misconduct and remained unemployed for 30 days. C. Was self-employed and ceased business operations through no fault of the debtor. D. Voluntarily resigned employment due to relocation before filing a claim. The correct answer is B. The correct answer is that Alaska credit unemployment coverage requires the debtor to be involuntarily terminated for reasons other than misconduct and to satisfy a 30-day waiting period before benefits begin. Other options describe requirements not mandated or that disqualify eligibility. Reason A is not correct. The law specifies an elimination period rather than a minimum continuous service duration before termination. Reason C is not correct. Self-employed individuals are not covered under involuntary unemployment benefits for credit insurance. Reason D is not correct. Voluntary resignation disqualifies the debtor from involuntary unemployment benefit eligibility. Question 16. After claiming constructive discharge, Michael filed a claim under his Alaska credit unemployment policy. Which policy exclusion most likely causes his claim denial? A. Employer-initiated plant closure due to economic downturn. B. Termination for willful misconduct in employment. C. Failure to serve the policy's minimum active employment period. D. Resignation from employment rather than involuntary termination. The correct answer is D. The correct answer is that the policy excludes claims resulting from voluntary resignation, including cases described as constructive discharge. Other exclusions address misconduct or eligibility periods but do not apply here. Reason A is not correct. A plant closure is an involuntary termination event, which is covered under the policy. Reason B is not correct. Discharge for misconduct is a separate exclusion that does not match a voluntary resignation scenario. Reason C is not correct. The claimant had met the required active employment period before resigning. Question 17. Rob lost his job due to a company downsizing on June 1st and filed a claim under his Alaska credit unemployment policy that same day. Which waiting period must he satisfy before benefits begin? A. 10 consecutive days of unemployment. B. 15 calendar days of claim approval. C. 30 consecutive days of unemployment. D. 60 calendar days of active job search. The correct answer is C. The correct answer is that Alaska credit unemployment policies require a 30-day consecutive unemployment waiting period before benefits commence. Reason A is not correct. The waiting period specified by Alaska regulations exceeds 10 days. Reason B is not correct. The waiting period begins with the onset of unemployment, not after claim approval. Reason D is not correct. Benefits are not conditioned on completing a 60-day job search period. Question 18. Under a decreasing term mortgage life insurance certificate, which of the following best describes how the death benefit amount is determined at any point during the mortgage amortization schedule? A. The death benefit equals the original loan amount minus the sum of premiums paid to date. B. The death benefit equals the outstanding principal balance of the mortgage at the date of loss. C. The death benefit equals the initial coverage amount reduced proportionally by the elapsed coverage period. D. The death benefit remains level at the face amount until the final loan payment, then drops to zero. The correct answer is B. The correct answer is that a decreasing term mortgage life policy ties the benefit directly to the remaining mortgage debt, ensuring that the payout exactly matches the outstanding principal at the time of the insured's death. Reason A is not correct. Reducing the death benefit by premiums paid does not reflect principal reduction and is not how decreasing term coverage is structured. Reason C is not correct. Reducing the benefit proportionally by time elapsed ignores the actual amortization of principal and interest in the loan schedule. Reason D is not correct. Describing a level benefit until an abrupt drop ignores the continuous balance-based decrease characteristic of mortgage decreasing term policies. Question 19. A bank originates a 30-year fixed-rate mortgage and obtains private mortgage guarantee insurance to protect against borrower default. When the borrower stops making scheduled payments and the lender enforces its rights under the mortgage, which outcome best reflects the primary purpose of the mortgage guarantee insurance? A. Reimburse the lender for the remaining principal unpaid after foreclosure. B. Provide the borrower with funds to cover the next few mortgage installments. C. Assume responsibility for maintaining and marketing the foreclosed property. D. Limit the lender's recovery to the appraised value of the collateral to cap insurer exposure. The correct answer is A. The correct answer is that the mortgage guarantee insurer reimburses the lender for the unpaid principal balance after foreclosure, which protects the lender from losses due to borrower default. Reason B is not correct. This is wrong because mortgage guarantee insurance does not provide funds to borrowers for payments. It indemnifies lenders for losses on default. Reason C is not correct. This is wrong because mortgage guarantee insurance does not cover property maintenance or marketing costs. It indemnifies the lender. Reason D is not correct. This is wrong because the insurer's role is to reimburse the lender for losses, not merely to cap recovery at appraised value to protect the insurer. Question 20. Under Alaska law, insurers must file credit insurance rate and form filings with the Director of Insurance at least how many days before they are first used? A. 15 days. B. 60 days. C. 45 days. D. 30 days. The correct answer is D. The correct answer is 30 days because Alaska statute requires insurers to submit credit insurance rates and forms at least 30 days prior to their first use, allowing the director adequate time for review. Reason A is not correct. Filing 15 days before use is insufficient, as regulation requires a longer review period. Reason B is not correct. Filing 60 days before use exceeds the minimum period mandated for review. Reason C is not correct. Filing 45 days before use overstates the minimum time frame required by statute. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.